Oh, very good morning, good afternoon. Hi, TM. Good to see you. Hope you're doing well. Hey, Ryan. Good to see you guys. Osho. Morning, everybody. Hope everyone had a nice weekend. I was pretty lively up in Scotland, Najim, with the rugby. I saw Scotland win the Calcutta Cup. So I expect there was lots of happy souls up there. Yeah, it was a good match, actually. I watched it. It was very good. Okay, let's just. Okay, folks, as we get stuck in today, the first thing to be aware of is that our news feed is down. Now, I've just got a little screenshot from other news feed. It's not too bad today because it's US President Day and a holiday in the US. So there's an absence of key data. Markets were quite indecisive last week. A general sort of sense of waiting for the next trigger. So I wouldn't be surprised if we see some pretty tame trading today. So just be aware of that. And we might see sort of reduced ranges in this holiday, not only because it's a holiday, but also because, the dollar's seeking new direction. We'll cover that in a minute. But for now, you can take a screenshot of this while we're waiting for our news feed to get up and running. Obviously, Asia Pacific stocks green, gains limited following lack of major fresh catalysts over the weekend, thin conditions owing to holiday closures. Right, we're also seeing similar with across all markets, really. That's kind of the theme. Absence of drivers, participants, mildly positive cash market open, but it's just there isn't any clear drivers. The dollar is range bound, lack of major catalysts. We'll have a quick look at the CPI print from Friday, but it hasn't really given us anything. And there's US participants away today. Euro dollar remains flat, although there is a minor break of an inside bar. So there's a slight technical bias for buying. We'll cover that. The pound is expected to see some weakness with some major data out this week for the pound. So that should help the euro pound pair move up. But every now and then, unfortunately, the pound is finding weakness on the prospect that UK Prime Minister Keir Starmer might suddenly resign. At the moment, he's holding on to his position, but I was looking at sort of some markets with betting markets had a sort of 70% probability of him going by June. Dollar yen edging higher on the weaker than expected Q4 GDP data for Japan. So you can see it's just lack of drivers. We'll have a quick look at gold for a potential technical area for upside. Copper's subdued as well with the Chinese New Year Spring Festival holiday. So there's a lot of holidays going on. China, US, indecision about the dollar. So this is sometimes just knowing the conditions you're in is really important. And this is a day where I'm just not really expecting very much at all. Now, if you just take a quick look around markets, I might look at things, technically. Things to note, you can see there is a bid come into the US Treasury market, but that's not really being seen by significant weakness in the dollar. Gold on that major trend line and trying to false break back higher here. So that's notable. And if you look at gold just from a monthly perspective, you can see that buying is really relentless. So dip buying isn't unreasonable when you see this kind of price action. That's like a nice hammer reversal. So you still favor buyers technically, and just notice we're in that sort of support area at the moment where buyers are trying to move up higher for gold. See what else is jumping out at me. Yeah, euro dollar. Just notice this price action. Right. Harami inside bar, minor break of a Harami inside bar. So from a technical perspective, right, that is what you'd expect. Yeah. And that to find buyers here in this region. Whether we will or not, I'm not saying we will because there's not a lot of data out there, but we have got a minor false break of an inside bar. So that should encourage further dollar weakness. And if you look at the Dixie, you can see you got a minor break of an inside bar. So that minor break should encourage further downside. If you look at the data from last Friday. Let's just go back to Friday. You can see that inflation data was a little bit weaker than expected, 2.4% for the headline, month on month 0.2%, the core coming in as expected. I'm still not putting a lot of weight on this data while we've got the Bureau for Labour Statistics delay impacting the release of data. That's still kind of very much a problem. This Friday, we've got PCE and ADP jobs data coming out. So if you look on 16, I think it's 18, we've got weekly ADP jobs data coming out. And on Friday, we've got the PCE print, which is the Fed's preferred measure of inflation. So that could be potentially market moving. But there's not a whole load of market moving data out today. So it's quite tricky. Is there any clear and obvious drivers? No, there isn't really any clear and obvious drivers. Looking at equity markets, mild bids in the futures market, volatility still elevated, but we've seen mild bids in early morning trade. Let's see what else there is. In the currency space, yen weakness on that weak GDP data out. So we've got Aussie yen upside bias, which is probably kind of the only clear bias we've got in the currency space. But given the outlook and the uncertainty for today, I wouldn't be looking at any trades. So the only thing that I'm really noticing is I think if you had to take a trade for me today, and this would be like, no, Najam, what I'm going to do, I'll send an email out so there'll be no future session today. I'll turn up in case anyone doesn't get the email and just say I'm not running it because it's still in the calendar. Yeah. If you look at this area here, that's still okay for a 4-5 point stop at the 53. So I wouldn't have a problem buying in from that area, 4-5 point stop. And it's a technical play, okay? It's just trying to take advantage of this minor inside bar break and to see if it does get an entry. You've got a low risk, high reward entry down here at the 53. And that's all I'll be taking today. Right? And that's just kind of like, because, if someone put a gun to my head, where would you trade? It would be this. Otherwise, I'm not looking at trading. No, Ram, they are different and they're significantly different. So a Harami inside bar, right, is this, right? That's a Harami inside bar because the body of the candle is within the body of the previous day's candle. So Harami means something like pregnant. So in other words, a Harami bar is like a pregnant bar. So you imagine if that's the mother's body, right, the baby's body has to be within the mother's body. Yeah. So that's the way. So you can see this is Harami because you've got the mother candle and then you've got the body, right, of the baby candle inside the body of the mother candle is Harami. And it's much more powerful than just an inside bar. So an inside bar, here's an inside bar. Do you see the body is within the range of the mother candle, but not within the body. So that's inside bar, right? Let's find another right here. Inside bar. The body is within the range of the mother, so it's an inside bar. That's Harami because the body was in the body, and it makes a difference. Basically, what the Harami bar is showing is greater consolidation, and when you get the more compression on the consolidation you get, the more likely you are to get a breakout. Whereas an inside bar is just showing a bit of consolidation within the range. So that's really what the difference is. So this is a minor break of a Harami inside bar. Is it within the, what I mean? It's close enough, right? The key thing, it needs to be the body needs to be within the body of the mother candle. You've got that little false break that just shows, okay, we want to go higher, and you've got that minor trend line. But you can see the compression. See the compression here? That's really what you're looking at. Prices compressing. And if we look at the depends on the overall context, Ram, but that's the right idea, right? Obviously, it depends on the individual context. So it's not just a clean thing, but you can obviously see technically this is consolidating, right? You can just see it. Now, what you want to have is ideally, if there's suddenly a reason to sell the dollar, it's a clear euro dollar long up to the 1.200. If there's obvious a reason to buy the dollar, then it's obviously down to here. So you definitely be using these as reference points, right? So you'd be thinking like that. That's what you'd be thinking of. Yeah. But as it stands, what I'm saying is you've got this false break of a Harami inside bar. So the bias at the moment is that. That's what I'm kind of expecting here. An easy way into that would be 4 or 5 point stop at the 55, 54. Okay. But like remember on a day like this, there's just nothing out there. There's no, there's no data right coming out today, and the US is on holiday, so you might just see really flat action. Earnings calendar, there's not particularly big names coming up, but we've got big tech stock names still to come, and that's most likely to be the next driver for the dollar. The dollar at the moment is being hit by that sell America theme that we saw because of Donald Trump. And the sell America theme is just sort of keeping that dollar weak, even though we've seen sort of firmer jobs data. The macros are pretty good, but still the market is wanting to sell the US dollar. It remains to be seen whether that continues. We just don't have a catalyst, don't have a clear driver, and the market is clearly indecisive about what to do next. So yeah, that's kind of the outlook at the moment. So aside from that, folks, there's just not a lot on today. Tomorrow, let's see if there's anything early data out. Got some CPI data out of Germany, but German data is just not in focus. UK employment data. If our euro pound longs are going to start taking off, I'll be looking for them to start taking off from tomorrow. And then we got CPI on Wednesday, and that's expected to be a drop lower. The Board of Peace. Yeah, let's have a look. Let me just check what's going on. Board of Peace, eh? Yeah. Right, I'm just having a look at my news feed. In and of itself, it's not a great big mover that I can see, but what you're obviously looking for is anything to do with Ukraine-Russia headlines. If there's a sudden peace deal that's arranged, then it's euro dollar upside. Euro upside, pound upside. Yeah, I do occasionally look at the COT reports. It's more that there's just not like a lot of there's just not a lot of kind of interest for me at the moment in the COT reports is the issue. But I show you what you want to look for, TM, is what you're looking. So the first thing to be aware about the COT report, for those of you who aren't familiar, is when the data's published versus when it's collected. So this is Friday's data. This is Friday's data, but it's based on the 10th of February. So what that means, if there's any data after the 10th of February, it's not contained in this report. But what you're looking for is you're looking for positions that are really overstretched. So here, Aussie dollars long, CAD dollar long. What you're looking for is a sudden reason to sell the Aussie or the CAD because you know all those longs have to unwind. That's the way I use it, right? And usually you can just tell, okay, where markets are at. So at the moment, pound is like right in the middle of the percentile range. So, okay, markets are buyers selling the pound, but it's not too stretched. So if there's suddenly a reason to sell the pound, that means pound weakness has some legs to go. And so you look at that euro pound long, right? The euro is stretched to the upside, great. If we suddenly see the pound get stretched to the downside, then euro pound upside makes more sense. Again, quite heavily sold. So, that gave us probably give us a little pop on the election news. So that's the way to look at it, TM, is look for it when it's really stretched in one direction and then look for a clear reason to buy or sell. So, say the Canadian dollar, so there's suddenly a strong reason to sell the CAD, then you'd be looking at the CAD based on its stretched positioning. That's the way I use it, TM. And every now and then you just get caught into a really good trade. And you can see, and you want to watch when the market's wrong-footed. Does that make sense? Yeah. So yeah, just the only thing to remember is just always remember this bit here. It says on the just always think, TM, okay, it's published on the third Friday, but the data was collected on the 10th. So let me say there was some really big data that came out on the 11th or the 12th. It means that that may not be an accurate reflection anymore because of the delay. All right, folks, that is all for today. Just a very quiet session. The only trade that I can see is this one here, 1.1854. 4 point stop, 5 point stop, try up to a maximum of 3 times. And that's it. And then we'll come back tomorrow and hopefully the markets will start moving. And obviously I'm keeping the euro pound buy in play. That is a swing trade. So that is still running. You see this Harami inside bar. An interesting, like a false break of a Harami inside bar. So that's technically weaker now. And we're back under this trend line. But I'm happy to hold with my stops just running under that 672 region. Okay, folks, that is all for now, and look forward to seeing you tomorrow. Take care. Bye for now.